A very good evening. Welcome to State of Business on our television. I'm Ashingsani Bera Sinha. Let's have a look at the headlines first. Country's economy has already been taken onto right track. State Minister Ajit Cabral asserts. Bureau of Foreign Employment will have discussions with the COVID-19 task force to set up 9 provincial centres for the purpose of quarantining Sri Lankan expatriates. News in detail. State Minister of Money and Capital Market and State Enterprise Reforms Ajit Cabral claimed that the government before 2015 had plans for a strong economy, but the strategic plans were disturbed on the way. State Minister Cabral made these observations addressing the 62nd Annual General Meeting of the National Chamber of Commerce, which was held in Colombo last week.
Even in the worst of times, we were able to maintain our business as well as our macro fundamentals in reasonably good shape. Why do I say that? In the 5 years, 2015 to 2019, our macro fundamentals had taken a reasonable beating. Our rupee had been depreciating at the rate of around 6.8% per annum for 5 years running, and that was a tough situation to deal with. We had $8.2 billion in reserves at the end of 2014. But at the time that we took back the government with only $7.6 billion in reserves, when we should have had around $15 billion, you could realize what kind of a stress we could have been facing, and we were facing. But nevertheless, we had to take some tough measures, and I think many of you understood, although it was very painful for so many people, in the fact that we had to curtail imports. But if we did not do that, the depreciation of our currency would not have been the 2.6% that we finally ended up the year 2020 with. It could have been a lot more.
State Minister of Money and Capital Market and State Enterprise Reforms Ajit Cabral added that current government is making all its possible efforts to assist the entrepreneurs continuing in their business ventures. Participating as a chief guest at the AGM of the National Chamber of Commerce, State Minister Cabral also said that the government will assure to keep the interest rates low and will manage the depreciation of the currency.
As soon as COVID struck, many people thought that it was going to be much worse. They would have expected the rupee to dwindle further, and many also expected interest rates to rise. But as a government, the strategic thrust of our government was that we wanted to make it as easy as possible for the entrepreneurs as well as businesses and the industries to do their business better. So on that platform, we knew we had to keep interest rates at the lowest level possible so that it would be easier for you to face the risk. There is no greater risk than having to deal with an interest rate of 18-19%, and that could really be the toughest situation for an entrepreneur to face. If you remember, from 2006 to 2014, one of the key thrusts of the strategy at that time was to maintain those macro fundamentals at reasonable, benign levels. We had to quickly get back to that situation. That's why you would have noticed from 2020, we were determined that those macro fundamentals are brought back, because that is the only way that we can have growth once again in our country. No one can grow if not for the fact that the platform is a stable one and it is a benign one.
The government has approved a proposal by the Energy Ministry for the Ceylon Petroleum Corporation to restart bunkering services. Addressing the Cabinet press briefing yesterday, Cabinet co-spokesman Udaya Gammampila noted that bunkering services run by CPC via Lanka Maritime Services had been opened up to the private sector since 2004. Cabinet co-spokesman Udaya Gammampila said that the Cabinet of Ministers approved the proposal to restart bunkering services by the Ceylon Petroleum Corporation. He also added that small quantities of oil imported by a few suppliers are stored at the Jaya container terminal and supplied to ships sailing across the Sri Lanka's territorial seas at present. He stressed that the CPC processes the capacity of importing oil used by ships in bulk at favourable prices and supplying the same to shipping companies and others at competitive prices. The minister also added that the move is aimed at increasing the number of vessels that will use services from Sri Lanka, thereby increasing public revenue. The Cabinet of Ministers has also approved a proposal to manufacture 100 railway passenger coaches locally with private sector participation to meet existing demands from the foreign countries. The Cabinet has also asked Transport Minister Gamini Lokuge to select an investor in compliance with the government procurement guidelines to manufacture the 100 coaches locally. Meanwhile, Sri Lanka Railways few days ago announced that they are already in a project of renovating the abandoned old-age train compartments by a local company. They also said that the local company will be refurbishing over 100 compartments to meet at least over 30% country's requirement of train compartments. India has promised 160 coaches and the government also expects to renovate a further 140 coaches that are currently out of order, but these, the statement said, will meet only 42% of the demand. Stay tuned for more news after this short break. Welcome back after the break. Minister of Labour Nimal Siripala de Silva says that directives have been issued to the Sri Lanka Bureau of Foreign Employment to have discussions with the COVID-19 task force to take immediate action for setting up 9 provincial centres for the purpose of quarantining Sri Lankan expatriates who wish to come back to Sri Lanka. Labour Minister De Silva yesterday told the media personnel that the delays of bringing back the expatriates' employees were mainly due to the issues related to the quarantine process.
There were about 63,000 people who were waiting to come from other countries to Sri Lanka. We had been able to bring about more than 30,000, but there is a backlog now. So the reason being the limitation of quarantine facilities in Sri Lanka. This is in the hands of the COVID task force, not with us. So now I have suggested to the Foreign Employment Bureau to take immediate action to have a firm discussion with the COVID task force and set up 9 provincial centres for the purpose of quarantining the people, expatriate labour, the people who are employed in other countries who want to come to Sri Lanka. The expenses with regard to that taking buildings on lease or on rent and paying the health or other personals engaged in the quarantine work can be paid out of the funds of the Employment Bureau.
Minister of Labour Nimal Siripala de Silva also added that he directed the Foreign Employment Bureau to utilise the reserves in their fixed deposit accounts to purchase air tickets for the people who went abroad after registering with the Bureau. Labour Minister appealed to the Sri Lankan expatriates who wish to return to the country to register themselves with the respective consular divisions of Sri Lankan embassies or contact the Foreign Relations Division.
We have already allocated 30.6 million to the expatriate employees who are coming to Sri Lanka, and we are giving 50,000 rupees each for each person for a settlement account. But now I have asked the Bureau to increase that to 100,000. And the balance 50,000 will be a interest-free loan to them, which can be paid in within a 1 year or 2 years. Then with the 100,000, they can start a small, some form of employment.
Colombo stock market yesterday suffered its worst crash in history with 245 billion rupees in value wiped off. Investors as well as the analysts blamed on regulators, whilst profit-taking contributed to the downfall too. The all-share price index plunged by 561.7 points or 6.56% at the S&P SL 20, dived by 251.7 points or 7.3%. Turnover was relatively high, still at 7 billion rupees with 232.8 million shares traded. Yesterday's market capitalization was at 3.49 trillion rupees, down from 3.74 trillion rupees. Despite the crash, year-to-date gain of ASPI remains healthy at 18% and 20.8% by S&P SL20. The market was halted twice as S&P SL20 suffered crashes of 5% in two separate occasions, leading to a suspension of trading for half an hour to cool investor anxiety. Biggest contributors to ASPI's fall yesterday was LOLC, JKH, Valuable One, Carson's and Expo Lanka. Some investors and analysts blame the Regulator Securities and Exchange Commission and the CSE for their directive and circular last Friday, which signaled the duo was stepping up surveillance on broker credit. However, independent analysts claim the directive wasn't harsh, but information that was previously provided on a monthly basis now have to be provided weekly by brokers. There was a concern that with low interest rate, brokers and investors were facilitating a greater degree of margin trading or credit facilities. However, brokers denied the allegations, saying that current best practices place healthy limits and pinned yesterday's downfall to CSE's original circular mistakenly listed 7 stocks including fundamentally sound LOLC Holdings, Expo Lanka and Brown's Investments for brokers to reveal credit exposure. We'll be back with stock updates after this short break. Welcome back after the break. Trading at Colombo Stock Exchange ended on a positive note today. The all-share price index dropped 238.09 points to close at 8,243.41 and the S&P SL20 gained 102.3 points to close at 3,289.68. The turnover was 6.2 billion rupees and over 182 million shares were traded. Up next are Forex rates. And that's all the news for today. Take care. Good night.